So I was asked to do a video on how I use VWAP, and what I'm going to do here is show you guys this trade I have two trades on, but one of them specifically I'm using the VWAP, and that's in this Nasdaq trade, which I got long right near 15,346. I had two separate entries. One of them, you can see my orders over here. One of them was 51s, and the other one was, where was it, 51s? I have to actually go back and look. I'm sorry, 51s and 73s. Or no, let me look. So I bought this 38% retracement. This is just analysis from my technical analysis, and then I bought this 50. But I bought here right around 10:35, and then added in at like 10:45, so 10 minutes apart. Now, this isn't the best reaction like that I would love to see. So when I don't have, and I'm going to blow this up here, when I don't have an incredibly good reaction, I like to kind of scale out the VWAP. So at the time of my second entry, the VWAP was right around 15,373. So that is where I'm going to be looking to get out. And that's just the general highs. Now, if I have a perfect entry, I like to hold a little longer. So this morning, my entry in the YM was right at this 35,245 zone, and within 25 minutes this market was above its open. Now the opening candle was 102 points straight down, expansionary bar. When we have a 102 point bar straight down off the open is typically one of the bigger, or even sometimes the biggest candle of the day, because you have the most amount of volume, new traders coming in. The market obviously just opens. When you recapture that fairly quickly, usually we're going to continue up in the direction. So in this case, in the YM, I'm being more aggressive with my targets. A lot of people, we always like to say, oh, hey, hold your winners. How many trading books have you read, or pieces of advice have you heard from trading gurus that are like, hold your winners? Well, to me, hold my winners means hold those trades that are instantly winning. And the trades that aren't instantly winning, you want to be a little more conservative with your target. And this is something I've learned over time. You're not going to be, know immediately when you enter a trade. By the way, that timer that just went off, I have timers on my desk every 25 minutes when I get in a trade. I like to gauge where the market's at after 25 minutes. Well, after 25 minutes, I don't have it on my screen anymore, but I have it on a separate screen. My entry, or we're right about my entry. So to me, that's not the best entry. If we're still where we were 25 minutes ago, I don't want to be holding this trade all day. I want to be taking a smaller profit target. So I just set another timer for 25 minutes, and usually around 50 minutes I'll look to kind of get out of the trade if we haven't gone anywhere, or at least look for an exit. It's important that you are aware of the amount of time you're spending in a trade. If you're a day trader and you're taking a single trade and you're just holding that all day long, what are you expecting to do? Right? You're not actively analyzing the market, you're not actively watching the price action, and you're not actively trading. So that's important. I recommend you guys, I literally have kitchen timers that I got on Amazon, 2 of them on my desk that I set. But when I don't get that move, the VWAP is where I look to exit, right? So that is how I use the VWAP. And for those of you guys who don't know, that's volume weighted moving average, okay? Which is all it is the average of price and volume combined. And you can add that on almost any platform. Thinkorswim, just go studies, edit studies, type in VWAP, VWAP, and then click add. I already have it, so I'm not gonna add it. But that is how I use VWAP. Weak entries that don't move in the direction of that I want them to within 25 minutes, look for at least a partial exit on VWAP. Do not be greedy. Hope this video helps. If you have any questions, hit the comment section below. Please like this video and feel free to share it with a friend that you might think will find it helpful. Take care.